I find it interesting that there's been a lot of talk about the bullion bankers visiting the Shanghai Metals Exchange. Went onto their website, and you can see for 4 straight weeks, starting the second week in March, you first had Deutsche Bank, then HSBC, then JP Morgan, and then Standard Chartered Bank all show up there. And the question is, why? Could it be a coincidence that you're beginning to see since that day, if you look at the numbers on the Shanghai Metals Exchange since the second week in March, their silver inventories are going straight down. The decades-long-standing ability of the Western commercial banks to manage the price, I think it's ending. And the real flow of metal from west to east is happening.
On March 13th, executives of the Deutsche Bank visited the Shanghai Gold Exchange. Representatives from HSBC Bank also made the trip on March 21st, followed very closely by Scott Willig, the managing director of Global Precious Metals, trading at JP Morgan Chase Bank, who visited the Shanghai Gold Exchange with his delegation on March 27, 2024. According to reports, Willig and his delegation held talks with Chairman Yu Wenjian of the Shanghai Gold Exchange on how to deepen cooperation and jointly promote the high-quality development of China's precious metals market. Willig told Chairman Yu that JP Morgan Chase Bank attaches great importance to China's precious metals market and has a long-term commitment to continue deep participation. The multinational finance company also pledged to actively leverage its own advantages, strengthen comprehensive cooperation with the SGE, and contribute to further promoting the exchange and cooperation of the precious metals market, both domestically and internationally. Under all the industry speak, experts have warned that there are many undisclosed reasons why executives from 3 bullion banks rushed to Shanghai in such quick succession, barely 2 months after representatives from the United Overseas Bank made the trip in January. Even more suspicious are the price movements that followed these visits. For example, when JP Morgan executives visited the exchange, silver prices were below $25 per ounce. Silver's bull run started in April, just a few days after the visit, and lasted for almost 2 full months, with the white metal peaking at 13-year highs in May. There has been much speculation about what happened in Shanghai during those visits, and how it all ties in with silver's price movements. The most popular theory among metals investors and analysts is that the bullion banks went to Shanghai to beg for silver, but they were turned down, which is why they temporarily lost control of the silver markets for a little while before they got back on track. In a recent interview with Arcadia Economics, popular bullion dealer and financial commentator Andy Schechtman draws attention to the potential implications of the 4 bullion bank executives rushing to Shanghai. This development, occurring at a time when the Silver Institute has been reporting silver deficits for years, is a significant indicator. Andy believes something much bigger than we understand is at play here, and all indications point to an impending silver squeeze. This event could potentially disrupt the entire system and allow metals like gold and silver to finally assume their true values, a scenario that could have far-reaching implications for the precious metals market. We will present clips from Andy's discussion with Chris Marcus. But before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos on gold, silver, and other metals and commodities. Thanks for the support and enjoy the video.
It's like the gold and silver markets seem to be playing by a new set of rules, as far as I'm concerned. And Zoltan Pozsar was dead freaking on when he said that we're entering a new system where it will be all about commodities. And I would say that commodities are becoming more valuable than currency. He who has the gold makes the rules. Well, he who has the gold, the silver, the rare earth metals, the copper, the lithium, the uranium, soft commodities, the food, the shipping lanes, they make the rules. I think the West has lost control of being able to hold down the paper price the way they once did. In years past, Chris, and you and I have suffered through it when silver squeeze is a prime example. I mean, I'll never forget that weekend. I mean, I never worked that hard in my life. I was staying up 22 hours a day, working nonstop to keep up. I figured I've never seen anything like this. How can I go to sleep? Give me more coffee. And then bang, they just crush it right back down again. And that was what, February 2021. Here we are, 3 years later plus, and It's just now getting back. It's different this time. Is it? Sure feels that way. It feels very, very much different to me. And I just think that what you are seeing is a set of rules that are now moving towards the real thing and the acquisition of the real thing. I find it interesting that there's been a lot of talk about the bullion bankers visiting the Shanghai Metals Exchange. And I went onto their website, and you can see for 4 straight weeks, starting the second week in March, you first had Deutsche Bank, then HSBC, then JP Morgan, and then Standard Chartered Bank all show up there. And the question is, why? Could it be a coincidence that you're beginning to see since that day, if you look at the numbers on the Shanghai Metals Exchange since the second week in March, their silver inventories are going straight down. Did they strike a deal with the Chinese? Bail us out, please. We're naked short so much. We need your help. We can't find silver because, there's 800, according to the LBMA, there's 800 million ounces of silver there, of which 500 million belong to the ETFs, leaving only 300 million. Who knows how much of that is really true when it's an over-the-counter market with not great transparency, and you can write as many contracts against those bars as you want. That's the promissory notes. It's what they've done. It's what they're doing on COMEX, which is 1700% rehypothecated. And the silver inventories on COMEX have been bled down, and maybe they're trapped with these massive short positions. Who knows what deals were struck in the back rooms with the Chinese? Help us, we'll do anything, we'll give you gold, whatever it is. But it's true. I think that there are some very interesting things going on. And when you realize that you cannot export gold out of China, you have to deposit a gold bar, your own gold bar, into the Shanghai Metals Exchange before you can then export it. This is all about silver. It's not about gold that these bankers are showing up. It's not about benevolence. They're showing up there, and it has to do with silver. And when you look at a country like India importing between 500 and 600 million ounces in the last 2.5 years, when you realize that, the COMEX inventory has 40 million ounces or so unregistered, which is rehypothecated 1,600%. When you realize the LBMA just came out and said their silver stockpile is the second lowest it's been in the 140-year history of the exchange, they're running out of ammunition.
For decades, the over-leveraged system that has allowed these bankers to easily manipulate the metals market and suppress prices was strengthened and enabled by the fact that investors didn't stand for full delivery of their metals. At no point in the past did we have such coordinated efforts from sovereign nations with enough wealth and sophistication to bypass their trickery and bring some new tricks to get their metals physically delivered. That is what's happening now. Countries like India are buying metals and standing for delivery immediately, throwing a wrench in the deceitful and manipulative system. This is why Andy warns that things are starting to get really interesting in the metals market. The long-standing ability of Western commercial banks to manage prices is ending, and we are witnessing the real flow of metal from west to east is happening. Yet, hardly one realizes what's really happening. Silver is still judged for its nominal value instead of its true value. Amazing supply-demand dynamics, and relevance in global green initiatives.
The LBMA trades 292 million ounces of silver per day and 20 million ounces of gold per day, right? You contrast that to the Shanghai Metals Exchange, where you have to deposit a bar first to trade it. They only trade 300,000 ounces a day, yet LBMA is trading 20 million. And he goes on to say that there was a survey done with the bullion banks in 2011, which said the real number is 10 times that. Because if you sell 20 contracts and buy 10, the LBMA only publishes the net, which is 10. It was actually 30 that you traded. So if we take that to be gospel, that there's 10 times the amount that they're telling us is probably more, that would mean that they're trading 200 million ounces of gold per day. And that would mean that they're trading 2.9 billion ounces of silver per day on the LBMA, which, in other words, they're trading over 3.5 times global mine production per day on the LBMA. This is how you suppress the price, by overwhelming the system with paper contracts. And what's the COMEX? 1,1700% rehypothecated. Overwhelm the system. But when you realize that the LBMA silver trading is only 3% of the gold trading in terms of dollar value, it's a tiny market, and you overwhelm it with paper, you can control the market until you get countries like India who accumulate 600 million ounces and China voraciously accumulating it. Silver is the linchpin. And I didn't even really understand it back then. It is the linchpin of this whole system breaking apart because it'll blow up the bullion banks, which will blow up the system. The bullion banks are the big commercial banks. It'll blow up the whole system. The lack of trust will have been shown to be of epidemic proportions. No one will ever trust us again. They won't trust the West. And I think that's exactly what is happening. This is why the banks are showing up in Shanghai begging for silver. If you can't export gold, you can only export silver. And we see massive deficits in both the COMEX and the LBMA in terms of stockpiles. Where are they going to get it to cover these short positions? And I think that's what you see happening. So I don't know, man. I think it's getting really crazy, Chris. I really do. And Jeffrey kind of illuminated it by, saying, look, these countries have chosen to move away from the treasury and move to commodities. They're the ones who are buying the contracts that the stupid banks are naked shorting by creating these contracts. Well, now they want delivery. What's going to happen? Maybe they went there and begged them not to take delivery. Why did Janet Yellen go to Brazil, or begging them to buy treasuries? Why is Jamie Dimon in China right now? Is he begging? Don't blow up the silver market. Let's work out a deal. I don't know, but I think when you see arbitrage of $4 plus, it tells you that they're not making it easy, and I don't expect them to, and they're not doing this out of benevolence. There is a quid pro quo going on, and the bullion banks have to offer up something. And at some point, there'll be nothing left to offer up in a world where commodities rule and paper currencies don't. Right now, we're transitioning there. The dollar still has a great deal of value globally. But what happens when it doesn't? What happens when, no, we don't want it? Because, the old saying, he who has the gold, I would say, he who has the gold, the silver, the platinum, the palladium, the uranium, the rare earth metals, and the food, and the copper, they make the rules. And I think that's the transition that we see ourselves heading into.
As the dollar gets weaker, more investors will begin to see the need to invest in metals like gold and silver, and all efforts to suppress metals will become futile. It is quite obvious that we are facing an imminent collapse of the global monetary system, the end of the banking industry, and the banking cabal. When it happens, everyone will rush towards gold and silver, the only real money that has survived thousands of years, and scores of eventually worthless fiat currencies like the dollar. With no banking cabal to regulate prices, things will take a different turn, and assets like gold and silver will assume their natural value. What do you think is the true value of gold and silver? Do you agree with Andy Schectman's predictions about the end of silver price manipulation? Please share your thoughts with us in the comments section below. For more videos like this, ensure you subscribe to the channel, turn on post notifications, and check out our other videos. Thanks for watching.